More of these stories at townhall.com.
Current or prospective clients should assume that the future performance of any specific investment strategy, including the investments and or investment strategies recommended and or purchased by advisor, or product made reference to directly or indirectly, will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional.
Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. And now, here's Bill Bullington.
Well, welcome back. Been a interesting last few days. I don't know if you've ever had to try to install one of the new LaserJet printers or not on your own. People that normally do my tech support weren't available this week. I tried to do it myself. That is hilarious. Yeah, not really. It's actually just extremely frustrating, but mind-boggling how much you have to know today to just run computers. And anyway, it'll keep a whole bunch of people employed. That's for sure. So, this is been very interesting coming up on the election, seeing how certain things are playing out, what's doing well, what's not doing well under the current conditions. And markets actually done very well over the past. The S&P, the bigger they are, the better they've done. In fact, the large tech companies have kind of taken over, and it makes people misunderstand. I think or they're not misunderstanding. They're just not seeing the fact that large technology stocks are dominating the S&P 500. Which most people look to as, that's the market. It's not really, it's not the market. In fact, if you look at the top 50 stocks, they make up half. I mean, they literally make up half of that index. So it's not a real good indicator as to what the average stock is doing. And I'm going to look up there are some other indexes. They're equally weighted. That means they put an equal dollar amount in all the stocks, instead of putting more money in the companies that are bigger. And there's a problem with that, by the way. That's one of the reasons that stocks have a tendency to get ahead of themselves, or at least the stock markets and large companies that focus on large stocks have a tendency to do really, really well when they're doing well. And then you get these big crashes, and sometimes it takes an incredibly long time to recover. I mean, people think this one took a long time to recover. The last correction that we just went through started in 2022, and it finally got back above that level in 2024. Well, that's if you're in the top 50. Most of the other indexes, mid-cap, small-cap, international, emerging market, they're still below that level. They're still below their all-time highs. So it can be very misleading, and they call it the fear of missing out, or FOMO in my industry. It can play tricks on you, and but having said that, this is what's kind of strange about that. Larger companies are ahead of themselves, not by a ton. It's not like it was in 2000. 2000 was, I don't know that we'll ever see, well, I hope we never see that again, but 2007, 2008, actually the correction that occurred then, the market was only a little bit ahead of itself. but because it had been growing at a very quick rate. And when it came down, it was just timing. It was during an election, and a very contentious last several elections in this country have been extremely contentious. So a lot of people upset, and makes them do kind of funny things with their money, in which they shouldn't be doing. In fact, if you don't know what you're going to do ahead of time, when the market does have a correction, you need to get that. That's what advisors are for. Panic. People come to us all the time during market turmoil, and they're panic stricken, and they fear the same thing when the market hits a new high, and they go, "Hey, look, why am I not making a new high?" Well, because we have some of our money in small cap stocks, and quite frankly, over the past few years, they haven't done quite as well. In the long run, they have a tendency to do extremely well, and in the super long run, they have a tendency to beat the larger companies because you're invested in companies like Microsoft and like Apple and like Dell, and when they're younger and smaller. Once they get larger, they move up into another index. Once the growth rate actually slows down, by the way, they've typically moved up into another index. So anyway, it's kind of interesting. I'm a big fan of looking at the math and trying to keep your emotions in check. And I hold just about every category, and I also overweight a couple of categories in each of the portfolios I'm running into the areas I see growing. When I say I see it, I mean I'm measuring the earnings growth and the sales growth in those industries. And I could pick the top two, and we just overweight them a little bit. They're already represented in the portfolios we're running now, but if you overweight them a little bit, and I feel like you have a pretty good chance of doing better. But if you don't do as well, you're not going to get run into the ground because you're not really increasing your risk all that much, and that's a big deal. You get close to retirement. Who wants to be taking risks? Who wants to have to put off their retirement, or maybe start to have to look for a job when you've already retired because you were too aggressive in stocks, and it went down so much that if you kept spending 4 or 5% or whatever it is you were taking out each year, and you end up running the risk of actually running out of money. That's really rough. So you really want to pay attention to how much risk you're taking, particularly if you're above the age of 50, you really need to pay attention. If you're in your 40s, not so much. You still have another 20 years at least to be able to ride out anything, and hopefully you don't have to learn. Hopefully, you don't have to learn how to do this the hard way. That's the way that everybody does it, almost. But there's a lot of value in just having somebody to talk to say, "Hey, I need you to look at this, and tell me what you would do if you were me." Well, that's what we do, and that I can tell you that the biggest problem is that people have this internal yearning for returns that are really high, but they don't have the risk tolerance to get those returns. And that's the number one problem I see from my 30 plus years in this industry. Everybody wants the big returns. Nobody wants to put up with the risk. And they think that a professional, quote unquote, should be able to do what they're asking for because they're a professional. Well, a true professional will tell you that what you are looking for does not exist. That's what a true professional would do. There are a bunch of people in my industry that'll just tell you what you want to hear, take your money, get you to pay the commission or pay the management fees, and just deal with it later when you find out that it's not going to happen. And I never liked doing business like that. In fact, it's actually illegal in the business I'm in because I'm a registered investment advisor. If it's good for you, it's good for me. If your account grows very well, then great. You're getting higher returns. Your assets go up. If they go down, I get a pay cut. So it's what do you think? I mean, realistically, if you do better, so do I. If you do worse, so do I. So we have a vested interest in your future to try to get you to make as much as you can. And again, the biggest issue that I always see, always, is somebody wants the returns of a stock fund, but they don't want the risk. And they don't understand that being a professional doesn't mean you're going to be able to avoid that. Being a professional means that you're going to find ways of managing that risk. And that may mean that you have to take slightly lower returns. Maybe not. Maybe you look at the amount of risk that you're taking and you talk it through. You run simulations. You say, okay, what would have happened if I'd have done this in 2007? Because from 2007 to 2009, the drop was over 50% in the S&P 500. Most funds were down at least 50% during that time period, and it took several years to make it back. And God help you if you retired in March of 2000, because that was right before a 3-year decline. That was 3 years. That was like Chinese water torture. I take it back. It was 2 years. No, it was 3 years. Yeah, it was 3 years. It happened March of 2000, and it bottomed in March of 2003. Now, when you see why I'm talking about the annuities. Okay? The annuities is a potential answer to that question, because to part of that question anyway. How do I avoid the great big drawdowns? Well, the annuities have guaranteed schedules of return. And that's typically all I look at. I don't really care that yes, there is a chance that the investments will actually outperform the guarantees. I don't care. I want to know is what's the worst case scenario. And it's really funny. Some people call me negative over that, because I'm going, okay, what's the worst thing that can happen? Because that comes out. And you know what? Legally, as a registered investment advisor, registered with the SEC and FINRA, we're supposed to be asking that. It's not an option. What are you going to do? What if? Okay, here's a scenario. What if this were to happen again? How would you feel? And so we're going to walk through that together. I've got tons of simulators that I can show you. Okay, doing what you're doing now, here's how much you'd have been down if you'd have done it. The last big correction. And I've done it so many times. It's memorized for me. I can look at what you're doing and tell you approximately how much that portfolio would be down. So that's one of the benefits of having run so many thousands upon thousands of these illustrations throughout my career over the last 30 years, and trying to get a good handle on this. So that's one of the reasons I've got people who only like stocks. And by the way, you guys need to stay tuned, because I am working on another offering, and I think you're going to love it. I really think you're going to love it. I'm not going to say a whole lot about it, because I have to. There's a lot involved in setting this up. But for you stock lovers out there, this should be right up your alley. And personally, I have most of my money in exchange traded funds. Why? Because they're inexpensive. I mean, the management fees are really low. They're super tax efficient. You don't have to pay on most of them until you actually sell the fund. If it's paying a dividend, well, you got to pay it's going to be taxed as a dividend. There's some advantages to that too. But but as far as the buying and selling of all the stocks that are in that fund, that's all tax deferred until you start to take the money out, and then most cases, it's going to be taxed at a lower long-term capital gains tax rate. That's a big deal. Okay. Now, I don't expect any of you to retain any of this because I know you're probably driving in your car right now. But that's why I'm going to invite you just to go to my website. It's bullingtoncapital.com. We can have a conversation, and you just tell me what you're trying to do, how much risk. And this is something I'd like everybody to think about. If you're thinking about this type of planning, you really need to know how much risk you can take. And I have so many people, they don't want to answer the question. Going forward, it's mandatory. If you don't answer the question, then there are lots of other advisors out there, and I'm sure they'd be happy to not ask you that question and manage the money anyway at their own risk. But anyway, I got to take a real quick commercial break. This is Bill Bullington. I'm right here on 1420. Stay tuned because I'll be right back.
Make it count, leave a mark, build a name for yourself. Dream your dreams, chase your heart above all else. Make a name the world remembers. But all an empty world can sell is empty dreams. I got lost in the light, yet it was up to me to make a name the world remembers.
Bob France here, and if you are dealing with a leaky roof, we should probably take care of that sooner rather than later, don't you think? Quick call to Sky Roofing will get it done, 440-349-6750. Look, there are a lot of roofing companies out there that want your business, but this isn't something you want to trust to a fly-by-night company. Sky Roofing is in it to stay. They've been serving Ohio homeowners like you and me for 24 years. That means they're doing it right by the roofs they repair, the roofs they replace, and the people that they serve. The pros at Sky Roofing have pledged to treat your roof like it was one of their own homes. So if your roof is in disrepair, maybe you've got some gaps in the shingles, call Sky Roofing. And if your roof has been good to you, but it's just that time that all homeowners face and you have to replace it, call Sky Roofing. Check out their work and the testimonials at the user-friendly website skyroofinginc.com. Then make that call, 440-349-6750. Call today, get a great quote, and treat your roof the way you need your roof to treat you. Sky Roofing is roofing done right.
Are you or someone you love struggling with memory loss? Have you been diagnosed with early dementia or mild cognitive impairment? Right now is an opportunity to apply to the Dementia Reversal Trial, a novel precision medicine and lifestyle approach for memory loss reversal. With only 6 sites across the country, including Nashville, Tennessee, Rocky River, Ohio, Hollywood, Florida, Folsom, California, San Rafael, California, and Walnut Creek, California. We are looking for participants aged 45 to 76 to join us for this 9-month clinical trial. To apply, visit the website dementiareversaltrial.com.
No doubt about it, we're spending more time at home, which is the perfect time to make it more functional and beautiful. Hi, Ed Flash Ferentz here for Artistic Renovations, Northeast Ohio's premier and award-winning remodeler. Artistic did a fantastic job with our kitchen in 2016, and last year, they were back for the master bath. Oh, my word. Do yourself a favor and go to artisticreno.com. Believe me, you'll love their ideas and without question the finished product. For a virtual consultation, call 216-520-0838 or visit artisticreno.com.
You've heard the saying, all good things come to an end. Well, not always. Sometimes they just take a break. That's what's happening with Our Lady of the Wayside's car donation program after 24 years and 96,000 rides donated. Pretty amazing. Here's the story. The car lot's owners sold the property, making it impossible for car donations to be accepted at this time. According to the Wayside CEO, Terry Davis, the next right steps will be determined and communicated soon, so stay tuned. In the meantime, Terry and the entire team at the Wayside thank you for your continued support of the 450 individuals with developmental disabilities in the Wayside's care. And please take note, you can still support them by making a donation at thewayside.org. Thinking about updating your home? Well, Joyce Factory Direct specializes in replacing old, outdated windows. Proudly made right here in Cleveland, Joyce Windows features their exclusive Smart Shield high-performance glass, which means you'll be getting the most energy-efficient windows for your home directly from the factory. Customers just love how much warmer their house is and how easy their new windows operate and clean. Right now, you can save 50% on all installations. Just call to schedule a free consultation with on-the-spot pricing, 440-243-5700, or visit joycefactorydirect.com.
back. This is Bill Bullington. If you have any questions that you come up with after you've listened to the show, feel free to go to my website. It's bullingtoncapital.com. And or you can call us 330-664-0700, and we will try to get back to you as quickly as possible. And the more I've been talking about this, it's funny. I bought my annuity. It's a pretty big chunk of my retirement plan, and I bought it a couple of years ago. And since then, the rates have gone up a little bit. It's not something that I'm super concerned with because I'm just happy as can be to be able to have a guaranteed income as high as it's going to be when I reach that age several years from now. It's actually almost a decade from now. But the bottom line is, in the meantime, if I wanted to, let's say I got hurt and I couldn't make it into the office, which is highly unlikely. My office is less than a mile from where I live. I could walk there easily, but you never know. I mean, if worst came to worst and I had to work from home every day, and decided to collect, unemployment, which I don't think I would do. I just keep working anyway. But anyway, I would be guaranteed from the one that I purchased last year or the year before last, about eight. Let's see, what is that? Yeah, it's about $8,300 a year, and just from that one little thing, it was $100,000. And by the way, it goes up. It goes up each year. That benefit, every year that I put it off, it goes up by 10%. If I were to wait again, and again, this is it's just a $100,000 investment. By the time I'm 70, they'll guarantee close to $14,000 from that initial $100,000 for as long as I live, and that's a big deal. What's really interesting is when you have when there are two people. So if you wanted to do this and you have a spouse and you want the income to continue on to the spouse, they literally use the same payout, but it's just on the one with the lower, who's younger, basically. So if my spouse and I were roughly the same age or within a few months of each other, that number wouldn't change. So if I'm married, I kick the bucket, and my wife ends up getting, she would end up, if I had her on there as the joint annuitant when we set it up. You have to do these on the when you set them up, incidentally. But if we did that, then she would be able to keep the income for as long as she lived. And that's pretty cool. And by the way, unlike a lot of other annuities out there, whenever you have a guaranteed income, some of them will only guarantee for your life only. Those typically pay out the highest because their risk of having to pay out to other parties is much lower. Well, it's actually eliminated with the contract of the language. But if you want the maximum income for yourself, let's say you've never been married, never had kids, and this money, you just want to see if you can maximize it. Great. It's called a life-only annuity, and those pay out the most. And they're very competitive with this one, by the way. The payouts are, and depending on the company, the time period. This is one of the reasons I've got a little questionnaire that I can send to you if you want to request it. It's for people who are looking for options on guaranteed income in retirement. I can shop around, look around to see what the highest rates are depending on your situation. These are a lot different. There are thousands of various products out there, and they're constantly changing. So it's important that whoever you're dealing with has the ability to shop and negotiate with all the companies out there that offer these types of products. So again, if you hear something like that and you want to, or if you want to send in a email or give us a call, I'll send out a little tiny questionnaire, and you can fill it out. It takes you less than 2 minutes, most cases, and we can shop it for you. So try to get to the best deal that we can, and that's basically just how I like to do business. Along those lines, I've been using a lot of exchange traded funds. I think they make a whole lot more sense for the average investor. Here's why. Well, there are actually a few reasons. The first reason was fear. Fear and greed overtake people at certain times, and not everybody, but it's hard. It's very difficult to um, sit still when markets fluctuate as much as stock markets do, not just here, all around the world. It's really hard unless you've been doing it for an incredibly long time period, or your personality is such that it's you're like I am. You're like, whatever. I understand what my long-term plan is. That the market went down 50%. It's not going to affect my long-term plan, and I'm just going to keep marching. And would I make adjustments? Yeah. If the market fell 50% the year before I retired, I might decide to hang on a little longer, or I would definitely decide not to spend as much money. Probably. The don't know that would be required, but those are the types of things that you got to kind of sit down and go through, and it shouldn't be that hard. Like a lot of people struggle with that, and I think a large part of the reason that they struggle with it is that they've never really sat down and done a budget. As simple as that sounds, and I hear it all the time. People go through. Oh yeah, I know what I need. I need about $4,000 a month. Okay, that's what I need to cover my basic living expenses in retirement. And so, how have we calculated that? Well, I just know what I spend, and my house is paid off. I don't owe anything on my car, and blah blah blah. How much do you want to put aside for a new car? Did you factor that in there? And most of the time, a lot of people come in and they've done that. So a lot of people come in and they've never done it. That's a lot of work. I mean, like a lot of work. If you've never put a budget together, believe me, I do this all the time. That is labor intense, and I'm working on some things for that too. By the way, yeah. I thought I would be done learning by this point in my life, and you know what? I've known for decades now that ain't happening. We're gonna be forced to learn and to continue to learn right up until the time we die, or you just neglect it. Which is one of the reasons I have a job. You should see what they have done to 529 plan. It is mind-boggling. It's a book. They've written a book about college savings plans. They are killing me. So you can actually, they're giving you the opportunity to set up these plans for the beneficiaries, and then the beneficiary can take it and convert it. If they don't use it for college, if they jump through all these hoops, and there are a lot. By the way, this thing showed up, and it's been changed. It's been altered now 3 times since I've been following it over the past few years. So really only the past 5 years. They've made 3 major changes in that time period. I'm like, geez, you got to be kidding. Leave it alone. No, I'm just kidding. But kind of. But yeah, so you do a 529 plan. You got beneficiaries on there, and if you've had it for a long enough time period, so this is the catch on this one. You have had this for a long time. And so if you've had it for over 15 years and the beneficiary doesn't want to go to school or didn't need the money, was able to get through on scholarship money and, working part-time or whatever, contributions that you saved up elsewhere, then that money can be converted into a Roth IRA. Now, that's all I'm going to say about it, because I've watched this thing morphing as they speak. And then the RMD rules changed again last year, and there are a bunch of calculators out there. The RMD rule actually got pretty easy compared to what it was before. So it is a little easier, but it is different. And your birth date has a big deal with what you need to do there. The required minimum distributions, that's what an RMD is, if you're not familiar with that. And I know a lot of younger people are not really thinking a lot about that yet. You will. Eventually, it is going to matter. And stuff like that, there's really no one right way. There are certain things you probably want to take into account. What other sources of income do you have when you're taking that out? Because if you convert a big IRA into a Roth IRA, that's going to subject you to a huge amount of tax that year when you make the conversion, and could affect the taxes that you're paying on your regular income or other sources of income that you have. So it's a lot. It's a lot to think about. It's a lot to work through, and no, it's not fun. It's not fun at all. But one of the reasons that I got a job, and one of the other things that I wanted to mention, I'm not going to talk about this a lot because working on what I'm working on right now, I did this a long time ago, and it got to be so much work, and I got to see that the ETF industry, it was in its infancy when I was doing this. The reason that I was running portfolios the way that I'm going to offer again was because there were no ETFs doing it. And I always like to use math to figure out what I should buy. Okay, which are the most profitable companies? Which are the ones that are have the best or cleanest balance sheets or are selling at the biggest discount? I want a combination of profitability and share price appreciation. Those are the two factors that I liked. The size is a big one. The S&P is solely size. It's the top. It's the biggest 500. Now they do use momentum. They didn't realize it was going to be momentum when they set this index up. I know they didn't. But the price movement matters in the S&P 500. So if in fact, if you just took out the top 50, looked at it once a month, for those that have the highest appreciation rate over the past 1 or 6 months or the last 12 months, you'd be beating the S&P, something that's less than 1 out of 10 professional money managers are able to do. Yeah, so that's kind of exciting. And that, like I said, that project it's going to be several weeks, if not several months, before I'm finished and have it ready to roll out. But it is kind of exciting to be able to work on that. The couple of reasons that I stopped doing it was you get a lot of really small transactions when you're doing that, when you're rebalancing. ETFs don't have to report that. ETFs only have to report what your cost basis in the fund is, like what price were the shares selling for when you bought them, and then when you sell them, what price did you sell it for? So that is a big advantage to exchange traded funds, but there are certain things that exchange traded funds can't do because they're too big. Okay. That's the area that I'm going to focus on, and should be pretty fascinating. I'm really excited to be doing that again. And again, I won't have a product ready for the general public probably for about 6 months. But anyway, I got to take a real quick commercial break. This is Bill Bullington. I'm right here on 1420. Stay tuned because I will be right back.
It sounds like an oxymoron, like jumbo shrimp, minor crisis, or exact estimate.
You think advanced technology plumbing is an oxymoron?
Yep, It's tech that lets us line customers' clay pipes with advanced epoxy
without digging up their yard
and guarantee the results for life.
The equipment even uses advanced light wave curing and robotics.
And it really is advanced technology plumbing,
which is a big deal when the old-fashioned method requires tearing up your yard
or jackhammering your driveway.
Now that's a minor crisis.
I see what you did there.
Fortunately, we can do better than an exact estimate.
You're killing me, Smalls.
We provide guaranteed upfront pricing while saving your yard.
It'll also turn a week's worth of disruption into a one-day job.
Wyatt Works pipelining makes the alternative look positively moronic.
So choose oxymoronic instead and
consider it done at WyattWorks.com.
Do you ever find yourself saying, I need a vacation? Vacation Fixation can help. At Vacation Fixation, we specialize in all-inclusive trips and cruises to Mexico, the Caribbean, and Disney vacations. Why choose us? Our clients book through Vacation Fixation because they are frustrated with online trip brokers and timeshare scams. Whether it's a weekend getaway, a family trip, spring break, or honeymoon, Vacation Fixation will personalize a trip just for you. Want to know the hottest destinations in Cancun, Punta Cana, Jamaica, or Puerto Vallarta? Interested in room upgrades, beach reviews, or details about resort restaurants? How about finding a trip with a direct flight? At Vacation Fixation, we take all of your specific travel requests and shop our suppliers to find the best deal. What's the cost? Our suppliers pay us so you don't have to. Call 330-573-8147 for more details. Or you can visit our website at vacationfixation.com or check out the deal of the day on Facebook. Vacation Fixation.
Is it finally time to update your bathroom? Bath Planet, a division of Joyce Factory Direct, specializes in replacing and converting old showers and tubs into new, beautiful bathrooms in as little as one day. We have transformed thousands of bathrooms just like yours into a spa-like oasis that has homeowners excited to use their new bathtub or shower. Right now, all bath installations are 50% off. So call to schedule a free consultation with on-the-spot pricing. 440-243-5700 or visit JoyceFactoryDirect.com.
Even though I walk through the valley, sometimes it feels like a crawl through the valley, but I gotta promise that I hold on tight.
Well, welcome back. Bill Bullington. I'm here every Saturday morning from 11 to noon, like it or not. Just kind of kidding. Yeah, you can reach me at 330-715-. Oh, that's the wrong number. That was my cell phone number. I don't want to be giving that out on the radio. 330-664-0700, and we'll try to give you a call back as soon as we can. Or you can go to my website, bullingtoncapital.com. Through the website, I subscribe to this service if you wanted to sign up for it. There's a bi-weekly, so every other week, we send out a few newsletters or articles. It's all electronic, and it's a service. I just edit the text, and they suggest a bunch of articles, and I approve the articles that I want to go out. So that's at least I'll have an interest in it. And it's pretty cool. I mean, there's some really cool stuff that that goes out. They had some really nice stuff on the HSAs a while back. They're you can convert those now. Health savings accounts, to Roth IRA. That's crazy. And you've also got the kids, the college savings plans, 529 plans that if they don't use the money, you can actually convert it to Roth IRA somewhere down the road. You have to have it for a long time. I don't know how the IRS is going to ever check on that, by the way, but that's their problem, I guess. Anyway, so there's a lot of cool stuff comes out. They offer it up. It's professionally written, professionally researched. I just look at it, read it, think, is this interesting or not? Either send it out or don't send it out. And I have I got a caller, and I have to apologize. He's been waiting patiently, and I'm not sure because my computer's actually not working. So I'll just.
It's Brian from North Canton.
Oh, okay.
Hey, Bill.
This is Brian. Oh, hey, Brian. How you doing?
Good. How are you? Hey,
pretty
just
good.
wanted to see if you were going to do. Yeah, can you hear me?
Yeah.
I was just going to see if you were going to talk about the scan stay for individual stocks.
Yeah, while you're here, on the phone, I'll just let people know this is good friend, been a client for an incredibly long time period, and is one of the better trend following investors I've seen. And it's a long process, isn't it, Brian?
It is. It does take some patience.
Yeah, and that's putting it pretty lightly, I think. But it's accurate. It takes a lot of patience. It's hard to do what you know you should be doing, and one of the benefits of having clients like you is I talk about it, and over the years I've come across some really nice investments, just through our conversation. And this is more of I would call it a do-it-yourself. It's a long-term. Hopefully, it's long-term trading, not short-term trading. What you're looking for here is something that's going to move up a relatively long way over a relatively short time period. And if it doesn't, if it goes down right away, we're just going to cut our loss and move on. And so that's a particular style of investing that was it's a really old one. It goes all the way back to the early 1900s, actually. And but anyway, when I ran I actually updated a little bit using whatchamacallit, the new telechart. By the way, do you use telechart?
Actually, I don't. I did a while back for a little while, but I kind of fell off doing it.
Yeah, it's a little bit expensive. I think if you get all the bells and whistles now, it's a little bit over $50 a month, so about $600 a year. But I don't know how else though you would be able to do all the things that it's capable of doing. And it is, by the way, it's still a lot of work. There were 234 that came up on the last scan, so that would be on Friday. And by the way, this scans real time for the listeners out there. It scans real time during the day, and it's pretty interesting to see how much that fluctuates throughout the day. And looks like a lot of over the past few weeks, I can tell you that a lot of healthcare stocks have been coming up. Some financial services companies, they seem to be on the rise. And man, I sure wish I would have held on to my NVIDIA. I must have been in and out of that stock, I don't know, 3 or 4 times, but very profitable, very profitable. But and as you well know, that there's no easy way to do this, but you can make it easier, So, and I feel bad. I forgot. What was your question for me, Brian? Oh, he must be on his cell phone.
Sorry, Bill. I just was going to ask if you were going to talk about some that were going to show up. They were showing up on the scan, like you do sometimes.
Oh, yeah. By the way, the market is actually pretty strong. If you look at the number of stocks that are making the scan, that is a kind of a telltale sign for the overall market. A lot of people like to use advanced decline lines. How many stocks are going up versus how many stocks are going down on the New York Stock Exchange. There's a whole bunch of indicators there. I just like to see how many stocks make it through the scan. A good number is about 100. Yeah, and right now it's at 234. So market's stronger than it's a lot stronger than it looks, and like a lot stronger than it looks. So that's good. I like the fact that it tends to pick up before the general averages pick up, if they're going to pick up. And then a lot of times you get head fakes. Market looks like it's starting to get strong, and all of a sudden, bam! Some of the big, huge firms out there were just waiting for the market to recover to take some profits. And a lot of times, those guys will come in at the beginning and end of the day when the market's most volatile and subject to manipulation, and they'll place big orders to get the market to move and encourage other people to come into the market, and they're just waiting to sell. So every man for themselves out there. Yeah. But yeah, I'm glad you called. I signed up. I might as well tell everybody. I signed back up for a Bloomberg terminal, and I did without it for a long time because I just didn't feel like it was that helpful anymore. And now I've come full circle, and I have clients that they want to do individual stocks. They don't like the exchange traded fund. And I go, okay, well, I'm not here to tell you what you can and can't do. I'm here to try to help you do what you want to do as best as I can, and to try to keep you out of making mistakes. Because you can make mistakes lickety split, and you don't in the financial markets. You don't get a do over. I mean, you lose the money, it's gone. Yeah, you got to go out and try and make it back. So yeah, if you can avoid a lot of that stuff, a lot of mistakes that there's somebody who never had that experience before would make, then you should be able to do pretty well. And I like valuations. They're actually on the high end, but they're not like they were in 2000. That was I look back and now I think, wow, in 2000, most of the kids graduating for college weren't alive. And they weren't even here yet. But so they're gonna hopefully they won't have to learn the hard way. I don't hold out a lot of hope for that though, Brian, because I've been around long enough to know. Most people have to learn by experience, unfortunately.
Right.
I always thought it was a whole lot better to learn from somebody else's experience instead of having to go through all that on my own. But evidently, you and I are wired a little differently that way from the rest of the public, because we seek knowledge and they seek experience. And I get it. It's really hard, super hard. I can cut these down to the stocks that are making the scan to if they've already to the very first time that they bust through that 30-day high. If it's made a 30-day high, if it's like the second time, like the next day, it won't come up. It's only going to come up on the day that it does cross that 30-day high. That would cut down a lot on the number of stocks that you'd have to see. And here's one. Yep. And just make it a little cleaner. But Tenet Healthcare, I hope I'm pronouncing that properly. I've known about this company for forever, and I never really knew exactly if I was pronouncing it correctly. Its symbol is THC, and it broke through a couple of days ago, but it didn't. A couple of the other things that I look for when a stock does go above its 30-day high is that it closes in the top half of that day's trading range, because you want them closing strong, and they just have a tendency to, over time, it's helpful. And not always. And actually, this one, the high volume was on a day that it did close above the 30-day high, but it closed down near the bottom 25% of its range. And now it's up about maybe 10%, about 5% or so from there. But healthcare, its price to sales ratio is 0.5. That's really low. So could it keep going? Yeah, it could keep going, but 2002 it was 38. It's 151 now, and that's a pretty big move over a fairly short time period. But if you go back to the early 2000s, it was at 208. 22 years ago, and now it's at 151. These are the types of stocks, and they're all over the place. And I love to point this out. Okay, when people say be a long-term investor in stocks, I don't think they understand what they're talking about.
Right, buy and hold.
Oh, man. Buy and hold is if you're going to do a strategy. Buy and hold that strategy. The strategy should be making adjustments. And that's the other thing I like about exchange traded funds. They are, they're run by computers, and it's math, and it's not emotional. It's if the companies deserve the spot on the agenda, they're in, and if they don't, they're not. So it really suits my style. I would when Warren Buffett was doing what he was doing, most of it anyway, it was the markets were a lot different. They were a lot different when I was a young man. And but anyway, you kind of learn from experience and from what other people are doing. And but anyway, I hope that helped. Did that answer your question?
Yeah, thanks, Bill.
Yeah. All right. Well, thanks. Have a good weekend, and we'll be talking to you soon.
You too.
Thanks. Bye-bye. Yep. And you can call, go to my website. You'll find the number there. Or you can email us, 330-664-0700. Most of the time, we're really just, I got about, did you say 30 seconds? Oh, okay. Wow, I really got to go. I can't believe this show's over that quickly. And I apologize for getting so off topic. But next week we'll come out. We'll take a look at a couple different options on income plans for retirement. How are you going to take the money? How are you going to make your money last as long as you do? Those are the topics of next week's show. And if you want to learn more about that before next week, you can always go to my website or call me, 330-664-0700. That's Bill Bullington, here every Saturday morning from 11 to noon. Have a good weekend, everybody. Good luck and good investing.
You just caught another edition of the Bullington Capital Report, broadcasting every Saturday at 11 a.m. on AM 1420, The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.
The preceding program has been paid for by Bullington Capital Management, LLC.